So any felony, I would know, affects your ability to be licensed in insurance. If you have failed to report to the commissioner any criminal prosecution of the applicant or licensee taken in any jurisdiction. If you've had a license to practice a business or profession licensed under the laws of the state of Georgia or any other state, territory, country, or the United States, revoked, suspended, or annulled by any lawfully licensing authority. If you are not in compliance with an order for child support. So failure to pay child support can affect your ability to have your insurance license. If you are a borrower in default, that can also affect your ability to be licensed. In relation to your ability to transact the business of insurance, if you've had a license, permit, authorization, registration, or privilege refused, revoked, suspended, limited, or restricted by any federal, state, county, municipality, territory, military, or other legal authority, that can affect your ability to be licensed. If you fail to report to the insurance department within 60 days of any action taken, any refusal, revocation, suspension, limitation, or restriction of any license, permit, authorization, registration, or privilege of any lawful authority. So there's a lot in there. Know the basic ones. Be a good person. Any felony can affect your ability to be licensed. A misdemeanor involving moral turpitude as well. Failure to pay child support. Borrower in default. Those are some big ones. No engaging in fraud, no cheating. Your license is due to be renewed every 2 years at the end of the month of your birthday. So your license renews every 2 years. In order to renew your license, we have a continuing education requirement in the state of Georgia. So not only does Georgia have, for most everybody, a pre-licensing education requirement, but you also must continue to learn. So you should definitely know the continuing education requirements. So your license renews every 2 years, and you have to complete 24 hours of continuing education. So I always remember that every 2 years there's 24 months, so I have to complete 24 hours of CE, including 3 hours of ethics, if I have been licensed for less than 20 years. So if I've held my license for less than 20 years, then I'm required to complete the entire continuing education requirement. So 24 hours of CE every 2 years, which includes, so they're going to try to trick you, it's not an additional 3 hours of ethics, it's including 3 hours of ethics. So we have ABCE, which is our continuing education business. So go and see them when you need to do your continuing education for the state of Georgia. Now, Georgia is unique. They do say that if you've been around long enough, so if you've held your insurance license for 20 years or longer, every 2 years you get a little bit of a break. You have to do 3 hours of ethics. So every 2 years, these licensed agents, these seasoned licensed agents, if you will, are allowed to renew their license by only doing the 3-hour ethic requirement. So 3 hours of reminders of selling insurance in the interest of your clients, of course. So there are 2 different rules depending upon how long a person has been licensed. During the 2-year period of time, during the 24 months, you cannot repeat a course, which would make sense. Temporary licenses. The insurance commissioner has the ability to allow someone for a small period of time to engage in transacting insurance really without being licensed. It's called a temporary license. So the insurance commissioner is allowed to grant temporary licenses in the event of the death of an agent or subagent, or the inability to act as an agent or subagent by reason of service in the armed forces of the United States. Also by illness or any other disability, or termination of an appointment by an insurer. If there is no other individual connected with the agency who is licensed as an agent or subagent in regard to insurance of the classification transacted by the agent or subagent that's deceased or unable to act. So the commissioner has the authority to issue a temporary license as an agent or subagent in regard to insurance of such classification to an employee of the agency or to a member of the family of said former agent or subagent, or to an associate or to a guardian, receiver, executor, or administrator for the purpose of continuing or winding up the business affairs of the agent, subagent, or agency. So to receive a temporary license, so not all situations would be grounds for applying for this sort of a license, but sometimes this situation may occur. There's no pre-license education requirement and there's no exam. The insurance commissioner, when granting a temporary license, it's effective for a period of time initially not to exceed 6 months. So the initial license so it's basically, look, here's 6 months to wrap up the business of the deceased person or wrap up the business of the person that was called into active duty. But it may be renewed. The renewals are for 3 months period of time. Renewals up to 3 months, not to exceed 15 months total. So I remember this with some sort of numbers, right? 6 initial, 3 months, 15. So once I get it the first time, if I was to get a temporary insurance license, it can be renewed 1, 2, 3 times, right? Because 9 plus 6 is 15. So that's the maximum that a temporary license may be good for. It's important to realize that a temporary license holder is not allowed to sell, solicit, or negotiate new insurance contracts. It's all about wrapping up business of the disabled person, of the sick person, of the person who was licensed that passed away. If ever someone's insurance license is revoked, suspended, or denied by the insurance commissioner, they are required to wait for 5 years before they reapply for licensure. So I would always know that. It's a 5-year period of time where you're out of the business for 5 years. You cannot reapply. Unfair trade practices. These are also sometimes called unfair methods of competition. Reasons why the insurance commissioner may fine you, suspend you, or revoke your license. Not that you would ever do any of these things. Rebating. So unfair trade practices, most states have the same Unfair Trade Practices Act passed over 100 years ago. Rebating is giving prizes, if you will, to your clients as an inducement to buy anything of value. Tickets to the sporting events if you buy a policy from me. A return of part of your commission if you buy the policy from me. A $100 Starbucks gift card if you buy the policy from me. The only way a rebate is legal is if it's stated in the policy. So if they didn't have a rule prohibiting rebates, whoever gave out the best prizes would always win, and that's not fair. Defamation is an unfair trade practice. It's making a statement that is false or maliciously critical or substantially misrepresents the financial condition of an insurer, calculated to injure any person engaged in the business of insurance. So saying, oh, don't go with that insurance company, they're having a hard time paying their claims, when it's not true. So defamation, there's a lot of definitions in here. So definitely you want to know the definitions for rebating. An inducement to buy, only allowed as stated in the policy. Defamation. I always remember defamation has to do with financial status because it's got an F. So if it's really true that that insurance company is having a hard time paying claims, well, fine, then it's not defamation. But this is untrue, designed to injure their reputation. Unfair discrimination. So Unfair discrimination is, of course, prohibited. So if you have two individuals that represent the same class, they should be charged the same premiums. You can't unfairly discriminate between the two. You cannot charge different rates based upon race, color, or national or ethnic origin of the individual. To do so would be unfair discrimination. You cannot discriminate on the basis of blindness or a physical handicap. Being blind does not mean someone is going to have a shorter lifespan. Certainly if they had a hazardous hobby like, oh, my friend used to have a nonprofit, or still has a nonprofit in Colorado, where he leads blind people to the top of 14ers. It's crazy. I don't even want to climb a 14er. So I suppose you could charge those blind hikers more for life insurance if you wanted to, but you can't discriminate solely based on blindness or any physical handicap. So my girlfriend's in a wheelchair. She drives a car. You can't charge her more for her auto insurance simply because she's in a wheelchair. You can charge her more because she's a crazy driver, but not because of her physical handicap. It's unfair discrimination to use sexual orientation in underwriting for any insurance policy. Refusing to write insurance based upon sexual orientation is also unfair discrimination. So unfair discrimination is an unfair trade practice, unfair method of competition. Misrepresentation is misrepresenting the terms of a policy. It includes misrepresentation of the financial condition of the insurer. To guarantee a dividend would be misrepresentation. Insurance companies are either stock or mutual companies. Stock insurers, if they pay a dividend, pay it to the stockholders. Mutual insurance company, if they pay a dividend, pays it to the policy holders. You can never guarantee a dividend. It is paid entirely at the discretion of the board of directors. If you were to project a dividend, you could only do that on a participating policy. Could you guarantee a dividend ever? Never. So participating policies are those issued by mutual insurance companies. Stock insurers sell what we call non-participating policies. To project a dividend on a stock policy would be what? Bad. Misrepresentation. Don't do it. Controlled business is an unfair trade practice. So we talked about controlled business. We said some controlled business is okay. When does it become a problem? If it's 25% or more. So these are all the bad things you are never going to do. People do though, and then you read about it in the newspaper. It's really awful. Twisting and churning just sound not good. So policy replacement to the detriment of your client, we call that twisting, like you're twisting their arm and convincing them to do something that is not in their best interest. Churning occurs when policies are replaced solely for the purposes of generating commissions. So twisting and churning just sound bad. No, don't do that. It's perfectly legal to replace a life insurance policy if all of the rules are followed. When is replacement not allowed? When it is twisting. Twisting is not okay. We have rules regarding advertising. No person who is not an insurer shall assume or use any name which deceptively implies or suggests that he or she is an insurer. That would be prohibited. Unfair trade practices, as far as advertising, any advertisement that contains an untrue statement or a representation that is deceptive or misleading would be prohibited, of course. Should never give out false financial statements of an insurance company with the intent to deceive. Boycott, coercion, and intimidation. Those all sound awful. Do not engage in any of them. Boycott, coercion, and intimidation are used as an unreasonable restraint to create potentially a monopoly in the business of insurance. We have a specific regulation as far as family violence. So any person that is issuing, delivering, or renewing a policy of insurance in this state is required to include with the policy or renewal certificate a notice attached containing the following language. It says, notice. The Laws of the state of Georgia prohibit insurers from unfairly discriminating against any person based upon his or her status as a victim of family violence. So it would be unfair discrimination to do that. Commingling. No co-mingling. This has to do with when you have customers' monies. You cannot put them in your own account. You must treat them in a fiduciary capacity. You must not put them in your checking account. You may not use your client's money to pay your rent. You are not allowed to use your client's premium payments for anything other than forwarding them to your insurance company that you represent. Granted, your commissions oftentimes is kept out of the premium, but you can't use the premium money to pay things like overhead. When you receive premiums from your clients, the money must be promptly accounted for, paid to the insurer, or paid to the insured if it's maybe a premium refund that is owed to the client. No co-mingling. If you were to engage in commingling, it is called a breach of your fiduciary duties. If you were to do this, breach your fiduciary duty, it would be grounds or cause for action by the commissioner. They could put you on probation, suspend your license, revoke your license. They can also fine you. A willful violation of the rule prohibiting commingling is considered a misdemeanor, unless the amount involved exceeds $500, where it is considered a felony. Do not violate your fiduciary responsibilities. Sharing commissions. Who can you share your commissions with? Your client? No. Your friend? No. A properly licensed agent that has the same lines of insurance that you have at the time the policy was sold. So they love that. They'll say, you have life and health, your friend has P&C. They make a referral to you. You sell the policy. Can you share your commission with your friend? You sold the policy on a Monday. They get their life and health license next Wednesday. No, they have to be licensed with the life and health license in order to share the commission at the time the policy was sold. An insurance agent or an agency is authorized but not required to charge, receive, or collect an unpaid premium on any unpaid premium account with a balance owing for 30 days or more a service charge. So if the premium is delinquent for 30 days or more, they can. They don't always do this, but the agent or the agency is allowed to charge a service charge. But it is maxed out at 15 cents per $10 a month, computed on all amounts unpaid on the premium from month to month. The amount of the service charge, if the amount of the service charge computed is less than a dollar charge is perfectly legal. You are always allowed to cancel a policy for non-payment of premium, but you are allowed to charge a fee if the account, it's like an interest fee kind of, if the account is unpaid for 30 days or longer. So those are all within the realm of unfair trade practices in the state of Georgia. Other miscellaneous Georgia insurance laws, unfair claims settlement practice. So this is a specific one that has to do with claims. Misrepresenting policy provisions or coverages at issue, telling them that their term policy has cash value, that would be an unfair claims practice. Failure to acknowledge and act promptly on claims communications. Failing to have procedures in place to investigate claims and settle claims. Not attempting to settle claims in good faith, fairly. Compelling insureds to file lawsuits to recover money to which they are entitled, offering less than they would win in court. If you know that the insurance company owes the insured $100,000, don't offer them $80,000 and hope they go away. You should always pay them what they are owed. You should never refuse to pay a claim without conducting a reasonable investigation. So you can deny a claim if there's a reason why you deny the claim. Once you receive a claim, you should always affirm or deny coverage when within a reasonable period of time. Insurers shall not fail to indicate to the insured under which section of the policy the payment or denial of a claim is based upon. So whenever they pay or deny a claim, they must tell you where in the contract it says they will pay it or they can deny it. The insurer shall not require the insured to submit duplicate claims forms so as to unnecessarily delay the payment of claims. If an insured has a claim, the insurer must provide claims forms to the insured within 15 days. So within 15 days. It is true in the state of Georgia that you are considered to have legal capacity at the age of 15. I have a 17-year-old who I would never, but the rule is what the rule is. So at age 15, you can contract to purchase insurance. I would definitely know that rule. So majority in Georgia, age 15. Now, how old do you have to be to sell insurance? 18, so be careful. So to buy insurance, 15, to sell insurance, 18. A binder. A binder is a way in which the insurance company has the ability to make insurance coverage effective before the policy is issued. Binders may be oral or in writing. They don't have to be in writing. Now, whether or not you have binding authority depends upon what company you represent and what kind of policy you are selling. But you should definitely know for common law purposes what a binder is. May be made orally or in writing. The binder may not exceed 90 days. The binder may not exceed 90 days unless extended with approval of the insurance commissioner. So binders up to 90 days. Georgia has a Life and Health Insurance Guarantee Association. The purpose of the Guarantee Association is to detect and prevent life and health insurer insolvencies. The Georgia Life and Health Insurance Guarantee Association does not cover an HMO, does not cover fraternal benefit societies, and it does not cover hospital or medical service corporations. So the whole point of the Life and Health Insurance Guarantee Association is to hopefully detect financial problems before they happen. So to detect and prevent insolvencies. But if one should occur, it provides coverage also. Provides coverage. Some coverage, not unlimited, provides coverage for insureds of insolvent companies. So one of the duties of the Guarantee Association is to look into the financial health of insurance companies. As a condition for an insurance company to be admitted in the state of Georgia, they must be members of and remain members of the Life and Health Insurance Guarantee Association. If they do not pay an assessment that is owed, they will lose their certificate of authority. The Life and Health Insurance Guarantee Association is run by a board of directors. The board of directors has a minimum of 5 members, up to 9 members. So a minimum of 5 members, up to 9. The members are selected by the insurance commissioner, which I do find personally interesting. So the members are selected by the commissioner. In approving members to the board, the commissioner is required to ensure that all member insurers are fairly represented. Board members may be reimbursed for reasonable expenses incurred while serving as board members. So if an insurance company goes broke, how do they get paid? How do the insureds covered by the insurance company that went broke, how do they get paid? Assessments are made against member insurers. So assessed in proportion to their size. So large life insurers would have a larger assessment made against them if a company should go broke. Claims are paid out of 2 accounts. So the Life and Health Guarantee Association claims are paid out of 2 accounts. We have the health insurance account, and then we have the life and annuity account. Coverage is limited. It's not unlimited. So I doubt that the dollar amounts will be on there, and they do tend to change over time. But this idea that coverage is not unlimited, or the fact that coverage is limited, I would definitely know. So for life insurance, your coverage, the most that the Guarantee Association promises to pay is $300,000 or the policy limit, whichever is less, and no more than $100,000 in cash value. For health insurance, the limit is $300,000 for health insurance that's not basic hospital, medical, or surgical expense or major medical. $500,000 for basic hospital, medical, and surgical insurance or major medical. For annuities, your protection is $300,000 in the present value of an annuity, no more than $250,000 in the net cash surrender value. So basically $300,000 is the most it'll pay, with some slight exceptions. But know what the point of it is. The Guarantee Association is mandatory, that it's funded by assessments, that larger companies pay more than the smaller companies do. And know that what is covered by the Guarantee Association are claims that occur prior to the determination of insolvency and those that occur in the next 30 days. So claims that occur prior to insolvency. So these are what we call covered claims. Those that exist prior to insolvency. And those in the next 30 days. That concludes our discussion of life, accident, and health common law. Make sure that you read your key facts. Remember, key facts, answers to previous test questions. Make sure you practice the exam, knowing what the right answer is, what's wrong with the other ones. Good luck.